I want to welcome you to Unguru Your Life with me, your host and spokeswoman, Yaya Diamond. Man, I am telling you, I am in love with this, man. We are doing things that most people would only dream of doing. We're unguruing our lives. You know, we're getting out of the things that we don't need to be in, and we're getting into the things that we need to be in. If that makes any sense to you, and if it doesn't, comment below. So that way we can go ahead and have a discussion. Mr. Terrell Johnson Bay. Okay. How are
Yeah,
you doing today?
all is well, beloved. How you doing?
I'm doing good. I'm doing good, man. I'm telling you. So tell us about yourself a little bit.
Well, I'm a 33-year-old father. I just celebrated a birthday last Saturday on the 5th. 33-year-old father, a Moorish American Muslim, entrepreneur, business coach, life coach. It's pretty much it. Real estate developer, and it's pretty much it. It's pretty much just what I do is my niche. It's my niche, they would say.
Awesome. 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 So, oh my gosh, there's just so many different things that we can go into, but I know you specialize in some things, and I want to go ahead and get this on the move and on the road, because I mean, you know, there's just only a certain amount of time that we have. And so I wanted to find out a few different things from you today, and I want to
Mhm.
make sure that I'm saying this right. You know, we're going to be talking about, you know, black, was it, sorry, badly minorities, how badly minorities are treated by the banks in general, and in the infighting that goes on with the minority community. This is so, this is just like we could take up forever with this one. But I wanted to go like into the basic real quick. What let's just go right into it. What is a corporation?
Well, a corporation is an entity that's classified as a person, able to do business, able to hold assets, collect money, and go into debt.
Or go into debt.
Yeah, yeah. Corporations go into debt. It's just
Yeah,
classified
right.
as a person. It's an entity
Yep.
solely for doing purpose, solely for doing business most of the time.
Uh-huh.
You can have nonprofit corporations that are not for profit, and you can have LLCs, joint ventures, but they're just mainly entities that you use to do business in.
Right, right. How important is it for someone to have their own business, to have their own corporation?
Me personally, in my opinion, is very important. The United States, most countries or most entities here are actually formed off of corporations. United States, they have corporations or entities that they do business in, and banks, Amazon, Walmart, the American dream, because we're built on capitalism. So the 9-to-5 worker usually funds the wealthy and the rich that all have corporations.
Goodness gracious, you said it all right there. You said it all. So let me ask you a question. You know,
Mhm.
going back into the minority community, going back into that, what do you suggest that the minority, you know, community do?
Well, first, I would say it would be the truthful education of who and what we are. I don't like misnomers like minorities. I feel like everyone's a citizen of the United States. But for most people that they classify as minority, Black, African, Negro, color, Latin, Indian, those are all derogatory terms
Yeah.
that were placed upon us that put people in a certain, I would say, a bracket to where they're not recognized legally as citizens. So me personally, I would start off first by teaching my people the truthful education of who they are and where they come from.
Then get into that corporation. You know, literally, you know, having your own business, in retrospect to working for a company, which one do you suggest and why?
I would say your own company. The reason because most corporations today that we work for, these big time employees, they don't really care about their employees. As we can see every day, it's a lot of low pay, no pension plans, 401s, and really don't have a lot of time to spend with their family. Me coming from the workforce, I was working 40, 50, 60 hours a week just to maintain enough money to go back next week. It's very hard to save money. It's very hard to grow money when they only pay you enough to just keep you coming back every day. So when we're disadvantaged communities that most of what they like to classify as minorities come from, it's hard for us to build wealth working a 9 to 5.
You
And when
telling me?
we, so it's basically understanding that we can give ourselves a foundation, starting your own business, entrepreneurship, It's not for everybody. I'm not going to say it, but for the those that choose, you know, it's a great conduit that you can use as a vessel to build generational wealth.
Definitely, definitely. You know, I absolutely love what you just said, because it's like, and I was thinking that, you know, they call that the rat race, where you get in there and you just keep going in circles. It's like, okay, pay your bills, work, pay your bills, work, pay your bills. It's just, there is no out on that. You know, it's just a wheel. It just keeps going and spending. Sorry, yeah, well, spending and spinning. Wow, wow. That's crazy. So, okay, so let's go into, so, okay, you have your company, you start your business, you go through your ups and downs, because, you know, having your own business means that you have to really push yourself out there. But then what should you do after you have your corporation? And I know that we have trusts and we have different benefits to the family. I mean, how do you do that? How do you incorporate all of that into a trust, and why?
Well, the reason that you would want to incorporate all your family's affairs into a trust, because a trust is what I call a treasure chest. A trust is another entity that protects the assets from creditors, people that comes after your estate. And the reason I would put my corporation, because it creates a veil for those officers, employees, or people or beneficiaries, so they don't become liable in the event of defaults, debts, bad losses, or even worst case scenario, bankrupting the company. So the company itself will be able to stand on its own and be able to take the blows and losses of everyday things that we deal with dealing with business. So, and for each subject, and say, well, trust and tax benefits, generational wealth tax benefits, or even funding your trust, because you really want to put assets in your trust. Trusts are mainly for to protect your assets. So if your business is owned by a trust, it's being governed by your family. It's not being governed by one individual or someone that was be responsible in the case, as I said earlier, a default, bankruptcy, bad debt losses, anything of that nature, unless it's in the event of fraud. But we don't deal in fraud. So some people do fraudulent or bad business practices, but that we don't advise people to partake in those. And the tax implications. There are a lot of tax credits and deductions for people that for corporations and trusts, different than individuals. Because corporations are taxed up to about, say about 32%. I think it just went down again, but individuals are taxed up to their personal income up to 37%. So individuals pay more taxes than most corporations and business owners. As we can see that today, we're always fighting about tax breaks and building big corporations out. And, you know, what about the people? But it's just the way that the systems is set up to operate, to do business up under. And once you use your corporation to build your wealth and clear your assets out, what you would want to do is then transfer those assets to your family. Because what we do at 294, we teach you to turn your family into a business. Create or the businesses, because you got two types of people. You got business-minded individuals and you got business owners. Business owners work for their job. And if you know, some people want the freedom. If you quit your job to go work for a job, you're still a slave for your job. So when you go and say, for instance, if you're familiar with, let me just use a company, Walmart. Walmart has a hierarchy. Walmart has a shareholders. Shareholders decide who the board of directors are. The board of directors are who govern the corporation. And that board of directors then appoint the officers of the corporation. And those officers, where they be president, vice president, secretary, treasurer, them and themselves operate the day and run the day-to-day operations of the corporation. But they don't own the corporation. So it's all about setting up a structure and have it structured to where it falls down to play. So it's saying that the family sets up more businesses under the one parent company, like for another example, I don't mean it as a side note, Google. Google's an LLC, but Google's parent company is called Alphabet Incorporated, which is a holding company that owns other shares of other businesses that they manage, other LLCs and operating entities. So what we do is we structure our families our clients to move the same way as the wealthy do, by structuring a family holding company that opens other entities that they operate through. That's the responsibility. The tax obligations are on the corporation and on the trust. So that way we as an individual don't own nothing but control everything.
I love it. I absolutely love it. I love it. So you're going to put because you said, okay, so let's say you have your house already, you have your business already, and now you're thinking about a trust.
Mhm.
Do you have to, is there like a specific way to get your house in the trust? Do you have to sell your house to the
Transfer.
trust?
Well,
Do you
if
just
you're paying
transfer?
a mortgage, if you
Mhm.
still had a mortgage on it and paying through a mortgage, you would want to go to your bank or whoever and retitle the name of the deed in the name of the trust.
Ah,
So, and then you would do a transfer of deeds, so transfer the property from you as the individual to ownership to the trust. So
mhm.
once it's done there, it's the ownership of the trust. You can file it on the record or you don't have to, but either way, I would suggest filing it on record so it would always be a paper trail in the event someone wanted to question the assets that's in there. Or
Right.
depending on where you structure your trust at, because some states don't allow people to know that they're what's inside people's trust. They just have it on record that there's a trust and who the beneficiaries are.
Mm, mm, mm. And could you be the beneficiary to your own trust as well as your family?
Yes, because you will be serving as a trustee or a grantor or a beneficiary. I'm also, so it all depends on who starts the trust because, like I say, you have family trust, you got irrevocable, revocable, complex, domestic, foreign. There are different type of trusts that you can set up, but we always advise people to sit down and determine what they would want to do in order to choose what trust they would go with.
Mm-hmm.
So me
Mm,
personally, I put everything in my piggy trust, but I wouldn't myself be responsible. What we have is corporate trustees. So corporate trustees, they manage the trust, and if they in the event, misappropriate funds or don't do what they're supposed to do for the benefit of the beneficiaries, they can be held for a breach of trust.
mm.
So I wouldn't want me personally or my family being responsible for the mistake of another. So I self personally would appoint a corporate fiduciary to handle the affairs of our family.
Mm, mm. That is amazing. That right there is amazing. So, I mean, we can get into that. We can go into that, and we can stay there for a long time. But I know, I want to make sure that I touch on everything that we have, and then that way people can contact you in case they have more info, questions or just whatever they want to do, whatever they
Yes,
want
ma'am.
to do. Definitely. So I wanted to make sure, okay, so we have to. What is an estate, and how do you fund an estate?
Well, an estate is pretty much all the land and property that you own at the time of death. Um, so whether if it's your mother or your father, when she passed forms, there was an estate created for her. So it's pretty much everything that she owns. So the difference between an estate and a trust is that the estate can create and hold a trust. So the estate, say for instance, Yaya Diamond. Yaya Diamond would be the estate of Yaya Diamond. Yaya Diamond could set up a trust and be the executor of that estate, but also serving as trustee of Yaya Diamond's family trust. So,
Mm,
or your daughter or whoever it may be, but that estate would govern those trusts.
mm,
So, in the way that you would fund trust or an estate will, like I say, will mainly be a trust, not an estate. But the way you will fund a trust is several ways. My favorite is insurance, financial securities, assets, cash, different things of that nature, the same way that you would go about funding a business or acquiring assets for your business, or even as an individual, you would do the same thing for a trust.
mm, mm. Now, putting your business into a trust, okay, and then going for corporate partners or sponsors or that, you can still run it like a regular business. Am I correct?
Yes, ma'am. It's ran like a regular business because the trust have to have meetings. Trust have to have board members with the beneficiaries. The trustee has to talk to the beneficiaries about things that are going on. The same way that a corporation is operated with a board of directors every morning. And it's just because no one person uh, governs it. But there are certain family trusts that they have one trustee, but some families may have co-trustees. So it's always governed the same way as a regular corporation would be. So
Uh,
if you want to have a trust for your business, you would just have your business use that same EIN number that you used and file your incorporation and set up a trust with the corporation owning the trust.
mm,
So it would be the same way because the trust or corporation is an entity just like you and I. It can have its own driver license, real estate portfolio, bank accounts, cash, cars, homes. Exactly. It's just not a physical person.
mhm.
So it's classified as an entity.
Awesome. Awesome. So it is. So how does that affect taxes?
Because individuals pay a individual tax rate, corporations pay a corporate tax rate.
That's right. That's
So
right.
corporations are afforded more tax credits and deductions than the individual are. So it's an offset and discharge in the taxes. Corporations get a lot of big breaks. Meals, food, lights, rent, cars, all those type of things. So if your family is moving like a business, of course your family needs food, lights, water, clothes, jewelry, homes, timeshares. That's all controlled and managed by your family. So in the event of you not commingling the funds, all employees and officers are allowed to use, depending on the bylaws of the corporation, are allowed to use the assets as they see fit, long as they're in the midst of doing business. So if your family is your business and everything that you do is about business, then it should be afforded as a credit or a deduction for your taxes.
Wow. Wow. Even living and breathing and eating and sleeping.
Yeah, because if I didn't have to get up, my creator never told me I had to get a job. So according to my religion, if I didn't have to get up every day and go outside in the world, I probably wouldn't wear clothes. So when I go buy that $1,000 money suit to go to a board meeting, it's for business. Or when I bought those tennis shoes, it was for business. Or my children, which are employees, when I go get those iPads, iPhones, cell phones, my kids are employees of my business. So it still would benefit the family to operate as a business. As an example, I don't know, a lot of people from my background, our families didn't eat dinner at the same time every day, but a lot of families that operate in this fashion, if you ever notice, you always see them out in department stores together. It's always a big family. When they go shopping during the holidays, it's the whole family, or even when they eat dinner every day, it's the whole family. Those in turn, and those sales are board meetings or trustee meetings that they keep and document. So that's why you never see most people at a gas station in other people inside the gas station, because they're mostly at the pump using credit. Or when you see everybody got the same truck, same Silverado, it's a tax write-off for businesses. They probably got a construction company, or they say family operated and owned business.
Right.
This is how a lot of the wealthy do, or other nationalities function, that our people of the underprivileged class weren't privy to. So that's our goal, is to put this information in this model out to show our people, they put us back in the game, so to say.
Gotcha. Gotcha. I just have one more question. And I think this question is something that I want to know personally. And I'm not sure if you guys want to know, but if you guys out there want to know anything else, please, we're going to have that information for him in the description box below, so that you can go ahead and contact Mr. Bay, and he can, he can help you get a trust or do whatever you need to do. But the one question that I have is, let's say today I form a trust and I don't have any liens or any kind of financial anything, nobody coming after me, nothing. But yesterday I bought something, or yesterday I did something. Would that still be covered in the trust today?
Yeah, all you have to do is transfer it over.
I gotcha.
It's just transferring ownership over to the trust that
Mhm.
you control and manage, that you do not own. So they got, like I say, you got grantor trust that you start. So you would still be the trustee. So you would still be liable in the event of something happening. But you can also appoint someone else to be the trustee for you.
Mhm.
So it would be the same. So if you bought something today and you've been had it, and you started the trust tomorrow, you could transfer all of your assets over to the trust.
Mm. What some people are trying to do is get out of being responsible for anything that happened. Is there a trust for that, saying that, I
I
mean,
think
I'm trying to figure out, why would you, okay, so you put your stuff in a trust because you personally don't have enough money to cover a lawsuit, or you know what I mean, but the trust itself does. Is that personally, like, can someone still take your belongings away from you if it's in the trust?
long as you don't bring, because banks and other things like that don't lien the assets out of the trust. Don't lend to trust. So they put liens on their assets. So when people say that they don't want to be responsible for anything, it's a mentality. Trust can't, the government can do what the government wants to do, and the government wants to do it. That's the first thing that we're gonna have to
Gotcha. Mhm. I know,
understand. But
because some people ask me, they say, "Oh, it's in the trust. I'm good." I'm like, huh?
no, in the event of fraud, they can go in there or breach of trust, but there are certain things that they cannot go after that's in that trust. But in the event of certain circumstances, they can. All depends on how that trust is structured, properly. And we advise people to go to lawyers. We don't actually structure trust and things ourselves. We guide clients on how to do it, or give them contact information to go contact the professionals, because we don't offer legal work, legal advice, because it's against the law. So this is strictly educational, but
Correct.
same thing. So, but we structure corporations for them to be able to build a foundation for generational wealth. We can show them how to structure their trust, what type of trust to get, how to use their corporation, what state to incorporate in, and how to fund the trust. Because a lot of people say, well, I'm going to get a trust and put the car in there and have the car note. You don't want your trust paying a car note. Why would you want your trust paying a car note? You want your corporation to clear the car, clean it out. So now it's an asset, and transfer the asset to the trust. And then, because you still have to pay taxes on the assets that are held in trust. That's what a lot of people don't tell you. And trust are taxed up to 37% after 12,000. So once you put 12,000 worth of assets or cash in that trust, then you have to pay taxes on it. This is when your nonprofit charitable organizations and nonprofits come into the play, that your family own, manage, and control, that you donate these and gift these assets to, or contribute these capital, these funds to it, to eliminate the tax burden. So your trust is never supposed to hold assets. Your trust is, it's a lot more that comes along with it to get it off the books about owning non-controlled everything. Because if you sitting here with a trust worth $100 million, they're going to tax you. They're going to get their taxes off. If you got $100 million in cash account, this is why a lot of wealthy use insurance. Insurance payouts, borrow from your insurance, build the assets up, cash value of your insurance. They don't have to pay taxes on it. IRA account, Roth accounts, things of that nature. You use those to fund your business so you don't have to get taxed for it. So that income and those wages, revenue, I would say, it goes to the corporation and let the corporation pay the taxes for it, not the individual. So in that, and again, that goes back to how your corporation is structured, whether it's an S Corp or a C Corp. You want the corporation to pay the taxes. You want the corporation to pay for the asset. You just want your family to benefit from it and have your family own and control it.
I love you. That is just amazing. That is exactly what we all need to be doing. And that is exactly why they should contact you. Definitely. Definitely. I want to thank you so much for being on the show. How can people reach you?
You can reach me at tulaneandfourth.com or at TL4CEO at tulanefourth_@tulanefourth.com, or you can follow us on Facebook at tulaneandfourth.com.
Great. And we can also get you on unguruyourlife.com.
Yes, ma'am.
Awesome. Awesome. Unguruyourlife.com. I'm telling you, we need to just disconnect and understand and learn how to, like you said, follow what they do. You don't need to be doing all of this, guys. You can be
Don't reinvent the wheel. I like to tell people,
it.
don't reinvent the wheel. Just put some air in the tire.
Yo, if I
don't
did
reinvent the wheel.
I can't reinvent the wheel. That's not going to work because it'd probably be square. But I want to thank you, Mr. Bay, for being on the show. And I want to thank you guys so much for tuning in. Don't forget to go to unguruyourlife.com and check out Mr. Bay's stuff and all of his information. But remember, this is a membership only platform, so you're going to have to join. But once you do, you will never regret it. And you will benefit. Hello. All right, guys. Until next time, don't forget to dare to be different. Bye.
Bye-bye.